stay short the pound. Pound would take out that 43.65 level. It did, went all the way down to 42. Good for 300 to 400 pips. I now think that we're in a recovery phase, possibly on both. More favored of recommitting to the short side of pound up around the breakdown level between 43.5. Starting off here with the US dollar index, we've had this recovery. As I said, we need for the dollar to really turn good and all clear back above 98.50. My best guess is that this first wave is complete. This may be an A wave or 1, and that we pull back in here, maybe to 96, some type of fib retracement down into here, and then get a C wave possibly to 97.5 to 98. So with that occurring, we could get recoveries in the pound, recoveries in the euro. Euro got very close to targets around 110.80. Yen looks a bit vulnerable for some type of pullback, maybe even a resumption of the downtrend. Finally got the pop in oil, which is pressuring Canada. The market tell was on the sell-off last week, and the crude Canada really couldn't get going. Barely recovered 38% back. Here's a quick look at the crude. Still believe that my scenario for 38 to $41 crude is still viable, which should continue to pressure Canada. I know a lot of people are looking at 134 as a possible entry in Canada. Here's your crude oil market, which is why I've been negative USD CAD. So we have the bounce off the lows. They tried to turn it lower yesterday. Pretty strong day here. So we can clear 32. That's how we could get 38, maybe 40. Hard for me to envision USD CAD prospering in that type of environment. Should the crude follow through? I've seen many days though where it looks like it's going to go and fails, but I think there are an awful lot of crude bears. The most bullish statement I've heard from most analysts, commentators is don't be short crude. So crude rallying. Also the S&P continues that advance. The dollar is not getting much of a bid today on the S&P's update. I talked about this recovery, which would be somewhat dollar supportive. We even talked about the possibility that we recovered to 2,000 with an outside shot of cleaning out all the bears first before a resumption of the bear market. So surprised that the yen is not doing better on the upside. So a lot of people looking to get short this market on 1940, which I don't think is a great spot. I think this 1916 to 80 level is 61.8 back. So a lot of people looking to lay out shorts here. This is when I think the dollar may run into some problems, is after the S&Ps complete this potentially fourth wave up here towards 1980. Give me a Y if you're with me. Gold had a very sharp pullback, recovering here today. And with that, Aussie did sell off for a couple of days, but not to the levels I thought it could get to. Aussie acting pretty good. So here's the gold. Maybe we're going to have another run up towards the highs here. Don't think this also supports the fact that the dollar could pull back again. And I'm not ruling out the bull case in euro either, that eventually could take us up towards 120, 123. I think we're going to need a little bit more evidence. May take a little more time for that type of scenario to develop here. Give me a Y if you're with me. Also, we want to take a quick look at treasuries, which with the S&Ps recovering, come off a bit. Still moving lower. So although there's a little bit of flow back into gold, it's not happening in the treasuries here yet. So, but we could get some type of bounce and correct. It's a pretty good break here from 130, almost 136 to 129.7. Could rally back to 132, 132 and a half. And if that happens, I would expect again to pull back, maybe not make new lows and take out the 111 level, possibly pull back towards 112-ish. Should we get a bounce and the S&Ps pull back from these levels? Give me a Y if you're with me. Any questions on any of the outside market correlations? Crude oil with USD CAD, gold with Aussie, US dollar yen with S&Ps risk on, and treasuries risk on, risk off. Okay, let's move on to our instruments. Starting off with Euro USD, we talked, the big play was last week on the third drive to a top formation, which I gave it. I thought that we might move towards this 110.80 level. Told everyone to book it. This was it Monday. That said stay with the pound short. This was Monday, so staying with the pound short was the right trade selection. Even had another chance to sell it again up near 145 on Tuesday. So have your stops over 45.5 to 46. Now starting to get some divergences here, but all we're doing really is rallying back towards resistance. I still favor pound shorts over euro shorts. The reason being, euro pound, I give at least a possibility of another push up for a third drive to a top formation. That would look something like this. Here's drive 1, drive 2. It could take us all the way up towards the 80 level. And I think just like the big rally that we had in euro pound was more due to pound weakness and euro strength, that could be the case too, to take us up to the 200-day moving average up near the 80 level. So seeing the possibility that we could get one more drive up in euro pound to the 200-week moving average tells me that my preferred long for now would be in the euro, not the pound, until euro pound peaks. When euro pound peaks, and the euro becomes a preferred short rather than the pound. Give me a Y if you're with me and you understand my analysis. So what do we do with the euro here? You know, it's okay to do nothing. You know, maybe we still grind down towards this 110.80 level. Believe that we'll be met with some selling pressure up around 112. Talked about that Monday, that we could get up towards 112.20. I'm leaning more towards a long position here. As you can see, we're beginning to diverge here in euro. Pretty classic 1, 2, 3 setting up. As I told you, sometimes you get 3 within 3. So just considering the divergences that are now developing in the euro USD, at the minimum, I don't think I'd be pressing the short side here. Be looking at maybe one more shot down towards 110.80, and then I think we could look for some fib retracements in the euro. Look a few of the fibs. And as I was saying during the introduction, I'm not ruling out that there can't be a huge rally in euro and a weakening dollar. A lot of it's going to hinge upon equity performance, but let's just ballpark it and say we're close to a bottom here. Again, 38% in the 200, come in around 12.5, 61.8, up around the 113 level. I just want to bring it back to the dailies for the big picture here. We did break out of a downtrend here in the Euro USD. I want to keep this line because this was the line, the back test I was looking for a long time, but let me clean this up as well. Oh, I know what we need to keep. Okay. So we have this back test line right here. Something that I had drawn for weeks before we got to that 1360 level for the short. Let's redraw this in. Tagged it pretty perfectly. But there's another line that we have to take into consideration here, and that would be a downtrend line that was also violated. I want to show you this. Okay, so I have a lot of confluence coming in here, down around where all the stops hunts were, around 109.80, 110. Here I'd be an aggressive buyer in the euro. Right now it's kind of a two-sided trade. Maybe we're just completing the first correction, we get a bounce, and then we get one more pullback to confluence and fib levels around 110, 109.60 before the next advance. I can't rule out, when you look at the weekly here, that we could be heading up. This could have been A, and this could be B, and if we have 1.618 of this, it could take us all the way back up towards this 120 level. Just put a horizontal in there. So since the Dixie did break down under 98.5, we have to give the bearish case for the dollar the benefit of the doubt. And you guys know that I was looking for that breakdown in the dollar. Don't think it's complete. Maybe down the road we get one more run in the dollar. I just don't think we're there yet. So kind of a classic level to be looking for would be this level here. All right, so then if we tie in some fibs off the highs from this huge wave that we had in 2015 to last March's low, which did hold here, that 38% is coming up in here above these highs. This would be the grand prize. If we got back above this 117 high that we had last August, late August, you wouldn't have many euro bears left looking for parity. Maybe that's what it's going to take. The 50% retrace comes right here at this significant low before we had the rally to 140. And then you're looking at some weekly moving averages up here around 125, where 61.8 back is going to be 127-ish. I'm thinking more in this range, this 122, 123 level is a possibility for this stage in the dollar. It would be some type of fib extension. So we're talking about from here, 104.45. So call it 1,200 pips. So if I wanted to get real bullish, I would go 1.618 of 1,200 pips, which is going to give you almost 2,000 pips, and 2,000 pips from this low here will give you the 124, 125 level. So, and when I called out the 3 drive to a top formation, I said it was a counter trend scalp. We may not be complete. We could do some work where this is A, B, C, but down at this confluence on the dailies, I'd be very interested. This could be the line in the sand for the euro on any pullback. We've had a nice rally, close to 800 pips. So then 800 times 1.618 is going to be 13 from 109, 110. It's going to give you that 122, 123 target. That's my bias in the next several months. Give me a Y if you're with me. In the meantime, it's a short-term two-sided trade. You know, we could correct this initial decline that we've had from the three-drive top, even head up towards 112, 113, and then have one more. This would be A, and this could be B, and then we get a C back down towards its major key pivot level, right around the 110 level, 110 to 109.50. Wanted to give you some big picture stuff to pay attention to in the euro. So that I know the debate is on, was this a break to buy in the dollar and we're going to blow off to new highs? We could correct quite a bit in the dollar, you know, just to put it in perspective. And, you know, I showed you a long-term euro chart. Take a look at the Dixie. Let's go weekly nearest. Here's the picture. So this was one heck of a move, right? So let's just call it from the 2014 level, 78 to 100. Let's call it 22. So 12 back from 100, it's going to give you 88, you know, maybe 90. And just a normal, if you're a dollar bull, this could have been A, and this could be B, and we could be in a C to flush out all the dollar bulls under 92 before we have a better chance for the dollar to regroup. I think that'll tie in with gold heading higher, although I'm looking for, you know, better entries than 1250 or 1200. I think there's a shot that gold pulls back more towards the 1100 range. Just wanted to give you a bigger view. Of course, we're going to be aware if there is a shift here by looking at the daily, because that was a very significant breakdown and area for us to watch. So really, until we get back above this 98.5 level, we have to give the decline the benefit of the doubt. And a lot of it, when you're trading, you look at velocity of moves. Okay, look how it took a week to get down here. And it took 2.5 months to recover and put in a failing rally, which is something I was looking for, that this was a wedge. And then look at this, once we broke down under 98.5, an area that I identified for at least a few months, you know, we achieved objectives in about 8 trading days. So this is impulsive. This looks to be more corrective. This was impulsive. This was corrective. We corrected the oversold conditions more in time than price. Took a long time to never even re-achieve those levels. This break was even deeper than this. So it shows the magnitude. It's some type of fib extension of this. So my best guess is that this is A. We get a pullback here. Then perhaps we get one more rally back towards 90, something equal to. So this is about 150 points or so, 170. So if we pull back, say, towards 96 and we get an equal rally, this is A, 170. We pull back 100, and then we do another 170. It's going to take it back up towards the 98 level, where I think the dollar is going to be a great short for a break back down towards at least 92 or 90 or lower to shake out every dollar bull that's been building that type of sentiment for over a year. So we have a two-sided trade working here, but big picture again, I think there's a possibility of shaking every parity bear out in the euro before parity happens. Give me a Y if you're with me. So some weekly views to share besides the scalping ideas. Okay. So back to our instruments. Pound, I think, has a much more negative view, negative look. So still think that this breakdown, I talked about the 365 level. So from here you had at least 250, 300 pips. We're starting to show some divergence here as well in the pound. You can see a 3-drive formation trying to develop here. 1, something like that. I think we're going to have trouble recovering much above this 380 level. So I would be looking to attempt shorts up here at 144 because the daily looks pretty negative to me, much more negative than the euro. You know, maybe there's even a speech, I think, this weekend on a possible Brexit. So I still think there's some more downside left in the pound. You know, there are weekly counts that would take it all the way down towards the 130 level, challenging these lows from all the way back during the financial crisis. So that wouldn't be unusual. We've had a lot of things achieve price levels that we had in 2008. Crude's back where it was during the height of the financial crisis. Deutsche Bank is lower than it was in the 2008 low, 9 low area, last great crisis, a lot of commodity prices, CRB, of course, as I mentioned, the oil. So this to me looks negative. You know, I teach this, right? I know it's a monthly chart, but the real simple implicator, the rules apply despite the time frame, and this was a very directional waterfall decline with intense momentum. And the weekly charts in the euro are much more constructive. All we did here was move sideways. You know, we barely even corrected anything. If you want to look at the macro, this was a pretty weak rally in the pound. Right? So this was the financial crisis. So when there's not as much, when we're not near important inflection points, I like to go macro to keep the big picture in view. So really this high that we had here back in the last summer in July at the 172 level was just a 50% correction. And look at how close we are to retesting the confirmed low. So my bias obviously is thinking that we're going to head lower, challenge the 140 level, 141. We'll see if we get a rally from there. If the dollar is going to weaken, it's hard to justify the pound collapsing with my view on the dollar. But maybe the pound accomplishes that while the Dixie is finishing the C wave to the upside up near the 97.5, 98 level. So short term, I think that there's a two-sided trade. It says not to be short down here. I still think we could rally up towards this 360 to 144 range and then get one more shot down before the dollar starts heading down more aggressively. Give me a Y if you're with me. US dollar yen starting to move sideways. I talked about that we could have a correction. Maybe this is the first part of it. A, B, C, and then we have a bounce, and maybe we could have another A, B, C if it's equivalent to this recent pullback. Perhaps we try 61.8 at 112.60. S&Ps have had 3 up days in a row together, hasn't done that in a long time, so due for at least a pause to give the bears some hope that they're still right about a crash. You know, I think that markets always try and shake out as many participants as possible before the move they're looking for happens. then they're so exhausted by the time it happens without them. If any of you have experienced it, I know I have. That's why you want to reduce your leverage, not make every trade life or death for you. It's just another trade, and it's winners and losers are just part of the process. But if you over leverage and your whole account and destiny rides on one trade, it's a recipe for disaster. So I want to get to some of the crosses. Euro yen, to me, looks like we could be in some type of ABC. This was a very good call last week. Said shorted over at 130 or better, looking for 25. We achieved it. We could go either way. We could get some type of ABC up to here. I'd be a seller if we did that up near 128. I'd be tempted to try the long side again if we tried this line down here at 125 and we diverge. So to me, this though still looks corrective. I would love to have another opportunity to try it down here at the 125 even level. Right here I'm neutral. I think it's going to have trouble up here. 28.5, 29. Two-sided trade. Want to see what it looks like at 25 to 25.50. Give me a Y if you're with me. Similar story in the guppy, but I'm a little bit more negative on the guppy because of my view on the pound. So guppy very well could have one more attack down here at this 160 level. We were here for a good piece of the move. We were bearish. I said cover half last Wednesday and then cover the rest near 160, and we had this plunge in one day of over 300 pips. So this was a pretty successful trade. We recovered, trying to put in a higher low, but I think I would favor shorts here. Perhaps we get ABC, but this is a confirmed low, so maybe even a short-term rally towards 64 could be worth a shot. Extreme 65 with stops over this high of the move, stops over 66, looking for one more shot down with the pound and a correction in the yen. But I don't want to press a short side of the yen or even the crosses because of my view on yen that, there are an awful lot of yen bears here. And, I was pointing out that we did have a divergence down here. Everyone's talking about the breakdown. Here's a weekly. I talked about it too. And the measure is 105. But will the BOJ go quietly into the night? It's one thing to say it. It's another to put your money where your mouth is. And the line in the sand is 116. I want to be bullish again, which really doesn't jive with what I see is going to happen in the dollar. You need closes back over this neckline. But this very well could just be, like I said, in the dollar, this is an A. And then we get a pullback down towards 112, and then one more launch attempt towards a breakdown at 116. Give me a Y if you're with me on that. And I did want to show you the Canada, which gave me a pretty good market tell when crude was selling off last week, that this was really the best it could do. It could only retrace not even 38%. So we're about to make new lows here. Don't believe we're going to have any kind of divergence. We should bounce, but I was looking at this and thinking that there was a chance. I know a lot of people want to try it around this 134 range, that we could end up working all the way back down towards 132-ish. The 200-day is going to come in around 132. And I really don't want to look at the long side of USD CAD until I think that the crude oil market has run its course, and I still think there's a chance for 38 to 40. So I'll be interested in seeing where USD CAD is once crude reaches, should it reach, when it reaches that target area. of the 38 to 40 level, then I'll be interested, because there are wave counts that after crude gets to 38 to 40, we're on our way to sub 20, 21 to 17 or target. So this rally in the crude could still just be a bear market rally. Some Ellioticians are calling it an ending diagonal, which means one more rally towards 38 to 40, and then a fifth wave decline in the ending diagonal to put in a pretty good bottom. Give me a Y if you're with me. So no reason, at least for now, that I see for buying Canada here. I think a lot of people were looking for this. I think it was a market tell that Canada couldn't even retrace 50% when crude broke $6. So kind of has a look of a big descending triangle. Maybe we're going to just get a continuation move, even something like this. You want a simple measured move from 630. The high was 40.15, so 380. 380 from today's low gives you 34.50. So 34.50 may be a range if RSI setups begin to line up. I want to wish everyone a great trading week, good hunting. I hope you're learning from me and that you have a lot of tools in your arsenal to help you trade these markets. Again, I wanted to show you some big picture stuff that makes the case for the dollar still being vulnerable, and some key pivot areas, especially in the euro, around that 110, 109.80 level in the days or weeks ahead. Any questions on anything I've covered here today? Any questions on anything I haven't covered? Okay, everybody, good hunting. This is Dale Pinkert with our follow-up analysis webinar on behalf of RoboForex.com. See you next Monday.